5 is how do you overcome financial hurdles such as maxing out on investment properties? That's a very, very good question. Question number 5. How I overcome my financial hurdles. I've always, if it wasn't for finance, I would sit here and say, I'm Nathan Birch, I've got 2,000 properties, not 200 properties. Finance has always been a big issue for me. I've got shitloads of equity, like probably a 10% LVR if I really look at it now, probably a 10% LVR, very, very low amount of debt. And I wish I had it to about 90% LVR, but it's, I'm okay with that position. But yeah, looking at how to get the banks happy with me. People get stuck because of their own emotions when it comes to investing in a property. When I buy a property, I'm thinking about not what I want. I'm thinking about what the bank wants. I'm thinking about what does the bank need from me to give me more money. So constantly, it's not about anything to do with me. It's not about the property. It's not about anything else. If I want to get to 10 properties, most people get stuck at 1 or 2 properties. It's because they buy a house, a unit, a villa, whatever. Generally, they add their own emotion into it. I've talked a lot about this recently, where it's not about what I want, it's about what the bank wants. So I constantly question about the strategy. It's like my strategy is that I want 10 properties. I want 20 properties. And I think about, well, if the bank gives me the money to buy 20 properties, and this is where no one looks at, obviously because they get stuck, I think about what does the bank require from me? The bank will require that I have an income. The bank will require that I have a deposit, and then I can be able to afford the deal. So when I'm buying the property, I'm thinking about, okay, how am I going to get the equity for the next property? How am I going to get the deposit for the next property? How am I going to get the cash flow to support the bank? So I'm always thinking about the lender, not about my own wants and needs and desires. So, for example, you can buy a property for $1 million, the rent's for $1,000 per week, and, that might be good, it may not be bad. If you're looking at buying a property for $1 million and rents for $1,000 a week, that's cool, but will that allow you to buy a second one or a third one or a fourth one or a fifth one? I'm thinking about what the bank will require from me for the next one. So do I need more cash flow to boost my servicing? Do I need more equity for the next deposit? Yes, if you buy a property for $1 million and you make 50 grand in equity, that's cool. You just made 50 grand. But if you could buy 5 properties at 200 grand a piece and get 50 grand equity on each of them, you've got 250 grand worth of equity. So you've got more deposits to go for the next 5, not the next 1 or a half of one. I'm thinking about, what the bank requires from me to lend me more cash. Do I need more cash flow? So what sort of assets can I buy to push up that cash flow? I see people come to me when they may be starting out, and I can tell instantly, and I have to be very candid with them to, protect them from making the wrong decision. So with all my investors that I work with, if I feel like they're going to hurt themselves, I will be advising them, look, this is going to hurt you because of 1, 2, 3. We need to think of X, Y, Z. People want to, go, oh, well, I wouldn't buy this house because I wouldn't live in it. I wouldn't buy this house because it's too far away. I wouldn't buy this property because of whatever the case may be. What I'm looking at is how this property is going to impact the servicing for the bank. Looking at if people come to me and they're in a really shit sort of position and they can't service, I might be sitting there going, okay, well, what is the difference? What is the gap, right? I always ask, if I'm speaking to one of my finance team, one of my brokers, and an investor is stuck and they can't get a loan, I'm like, okay, why can't they service? How far are they away from servicing? And what do we need to do to get them to service? So you might be failing by $500 per month, and you might need an extra $500 per month to be able to service and get a loan. So you might have 50 grand cash, and you could buy a property that rents for $200 a week. $200 a week times 4 in a month is $800 a month, maybe $900 a month, whatever it is. That would help you get the servicing, so then you can go back and pull out more equity from your other properties. So it's important to have a property strategy for accumulating assets, but at the same time, it's important to have a debt strategy on how you're going to be able to accumulate large amounts of debt and large amounts of, assets in your portfolio. So